And good morning, everyone, and welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, and hopefully making money doing all those things. So, with that, let's go ahead and since we're going to be talking about live trades, there is risk involved. So let's go ahead and get into that. First, I'm also in the United States, and I'm pretty sure this is required by law, considering it was I used to have to weave this into all my phone calls 25 years ago. But at any rate, it goes something like this. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of risk may be can work against you as well as for you. So before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. And I'll show you right quick what happens when you are not paying attention to the market and not doing well with the market. This is what this looks like. This is my latest challenge with Audacity Capital. It's a $30,000 account, and I'm down 2,000. So I'm just on the edge of blowing this challenge again. Now, prop firm challenges are very, very difficult because if you've never traded with rules before, then you're going to be trading with rules, and because you're managing somebody else's money in essence. And this is a demo account, so I'm not managing anybody's money. I can't go withdraw this at any time. Because one, it's not mine. So we'll see what happens with that. In the meantime, let's go ahead and get into what's going on in the world. So here we have where is it? There we go. Event risk for today. We're looking at Canadian CPI, Canadian inflation information. We'll see what happens with that. Coming out at 8:30, and that's about it. And then we have the New Zealand rate decision later on. And that is going to be projected to be a hold. We'll see if they have any surprises for us. I don't trade the Kiwi. There's just not enough liquidity in that market for it to make sense to me. But at any rate, or the one time I did try to trade it, it was not good. But at any rate, it was very, very hard to see what was going on because of the low volume in that market. But here we go. We have an hour, yen reverses Monday's losses. How about that? So the yen has turned around again. It is the number one currency, or the strongest currency in the world right now. I'm not going to say number one. British pound is all the way down there at the bottom. Dollar, somewhere in the middle. Let's go ahead and see what's going on. So the DXY, I'm getting a little plucky this morning. In the London session, the New York session won't open for a few hours yet. But that's that's where we are right now, about 97. 97.12. So we're looking at a possible downward rate for the euro, right? Let's look at this real quick. These are bond yields across the country over in the major 10 places in the world where they trade bonds. Although that's more than 10, I don't know what that is for. But the top 10 current maybe economies in the world, minus China, because China's bond market is always fixed, I think. But since they don't have a floating market on their yen, but this is what's going on right now. This is the weekly bond yields. They're all headed south except for Turkey. They're a mess. But at any rate, the bond yields are all going down, which means there's more money flowing into the government bonds, which means government debt is in theory going down if governments, unless they spend like Japan with a 236 debt to income ratio, or debt to GDP to debt ratio, debt to GDP ratio rather. Then you're going to have they're spending 2.3 times more money than they're taking in. That's an issue. The United States is only spending 1.4 times what we're taking in, so we're a mess too. But we're, all bond yields are going down. So with all the bond yields going down, basically at the same rate, what you're going to have is a static currency market because neither currency is going to end up being trading higher or lower than the other. So it's very interesting to see this taking place. It's kind of the opposite of trading, of how we've been trading for the past couple of years. For example, the last part of toward 2022, I guess, there were constant dollar rate increases. and that was setting the dollar higher and higher and higher, and now against the other currencies, and now that's starting to tame a little bit. So we've got 96.12 on the DXY. See which one's going on higher on this one. This one I just kind of look at just to see which one's pulling ahead right now. Right now the euro is stronger than the dollar, than the pound right now. And that's because I like trading some other currencies. I'll show you which ones in a minute. This is the euro versus the dollar. You see all this buying pressure right here, and the January 2026 high weekly high close, and it's starting to dip down below that. So that's kind of an interesting little take on that too. Not really going anywhere on that one. So it's selling amongst a lot of buying issues. Places where there should be a lot of buying, there's not. So that's what we're starting to see now. It's a lot of deflationary pressures. Here we have the dollar versus the yen. And later on, check out Michael Boutros's Forex.com video he's got on YouTube. You can also register for the webinar at Forex.com. But he's got some outstanding information on technicals. This is pretty much all technical analysis. I don't spend a whole lot of time on fundamentals. I do keep an eye on fundamentals, but I don't live and die by news releases. So let's look at the dollar versus the yen. Dollar versus the yen is kind of got a little plucky yesterday. Yesterday, and then came right back down. So it is still looking in that range of a possible carry trade unwind. With the yen bond yields going down, also it makes that a little bit more difficult. Pound versus the dollar, right here, again going down amongst a lot of buying pressure. So it's technically it should be buying, but it's not. I think that's because the bond yield differentials are going down at about the same rate. Also see a tightening of the Bollinger Bands being kind of slowing down in that market. This one's expanding. Pound versus the yen. I think we're going to see a lot more of downwards pressure on this, especially with the bond yield differentials. I have some trades poised right now at around 207.70, catching the last part of the wick. It's kind of dangerous. I should be down here at 27, 23, 27, somewhere around there, but I'm thinking that 27 is not going to hit there unless it gets onto a full-blown selling frenzy, and then we'll see what happens with that. I might want to keep a close watch on that. Euro versus the yen, again, same thing. Bollinger Bands are starting to increase a little bit. Lots of selling pressure. I've got pretty much a price rejection right there at 181.18. We'll see if that can carry through, considering it's 10 pips above that right now. These are the daily charts, right? Yeah. Canadian dollar versus the Canadian. This is another reason why I don't pay attention to a lot of the news that's going on, because there's a lot of jawing going back and forth between the United States and Canada. Who knows? Maybe we'll invade, maybe we won't. That's a joke. We're not going to do that. But at any rate, we don't want Canada. Because I live really close to it and it's really cold up here. For example, we've got a high of 33 degrees outside. It's a scorcher. So we have and that is actually one of the warmest temperatures we've had all winter. So with that, let's go to the UCAD, into the CAD versus the yen, and here we are. We have it again. Looks like it's at the bottom, but I'm not so sure about that. I think we're going to see a lot of more selling pressure on the yen pairs as the carry trade starts unraveling a little bit. Matter of fact, I am going to pull this trade. I'm not going to do it right now. Yeah, maybe I will. Here we are. We have the oil prices. Oil prices are not really going anywhere. Kind of static right now. I do not trade oil, by the way. I don't trade oil right now. It's just not an appealing market to me. Aussie versus the dollar. Again, was flirting with over 70. It's still over 70, right at what should be a lot of buying pressure right now, too. So it should go higher on the Aussie versus the dollar. Gold is not doing so well. It's right there in a bunch of selling pressure. Let's see if it can break this, break 4,900. If it breaks 4,900, it could go down further. Guess that next stop is going to be around 47.78. Judging by this level right here, which would be the February 4th and 5th lows right there. After that, we're looking at 4,600. And we could see a big reversal like we did in 1979, where it went all the way to the top and then came all the way back down. So we'll see what happens with that. Platinum. Platinum, again, looks like a lot of people are shorting platinum these days. Palladium, again, not really burning it up. Silver, one of my favorites. However, silver is headed down, it looks like. Could be hitting some buying pressure sometime soon. If not, the next test is going to be 70, 80. It's about 71, 70, 89. So we're right in there. And then after that, it's going to be headed. If it breaks that, it'll be headed probably down. Next stop is going to be around probably here, around 58. After that, 50. Oh, 54. After that, probably down here, 46. If it hits 46, it'll be a very impressive run downward. And it might be a little weird for me considering I have a lot of silver. But at any rate, with that is about all I've got. The American markets were closed yesterday, so we don't have anything to talk about the software sector. I'm kind of watching this. This came up over the weekend. I was watching. Somebody pointed out that the IVG has started to diverge from the Nasdaq and tech, and that the software companies are headed down. And this is what we're kind of talking about here. That is software tech sector was right up here at 118. Now it's trading at 82. But look at this HubSpot. Let's go to the weeklies on this one. HubSpot is a component of the IGV. High is 813, now trading at 243. These stocks did not split to my knowledge either. Intuit, 784, 399. The reason why I'm in this is because I'm in customers of all these. I'm in customers of two of them. I was a HubSpot customer for a long time, and I finally just said I got other things to do. But I'm still an Adobe customer, still an Intuit customer, and these people, in my opinion, their business models are flawed. They're paying more attention to growing AI than they are their customer base, and with that, they are going to lose money, and they're going to. It's not going to work. It's potentially not going to work out very well. So with that, that's all I've got for today. We're going to get back into the DXY a little bit later and see what happens with that, and also keep an eye on this one because this is the one that I'm currently currently have money at risk on. I don't have any active trades in right now, but I've got a couple of buy stops around 207, 207.89. That's probably buying into support too. So probably need to revisit those trades. 207, 207.70. One-ish run there. But with that, that's about all I've got for today. You guys have a great one. If you like this video, then hit the thumbs up button. If you want to see more of these videos, then subscribe to the channel. And I'll put these out pretty much daily right now. And if let's see, one more thing. If you want to talk to me, then by all means, hit me up in the comments, and I'll get back with you as soon as I can. You guys have a great one. Talk to you later. Bye.